Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. And we are seeing grains lower this morning with livestock futures, hogs to the plus side as well as feeders, but live cattle futures are lower. And let's start off talking about live cattle, Scott, because we had a break yesterday after a very strong day on Monday. And Tuesday and Wednesday, the break coming, what? Because of outside markets, did we hit chart resistance, profit taking, or was it cash trade?
I think you probably alluded to two of the reasons there for sure. And thanks for having me. So yeah, outside markets, we always have to kind of keep our right eye on those and see what's happening. We got a lot of nerves happening in that category. Our demand still appears to be holding on strong and not being an issue as of now, but there's always that looming. But part of me saying after, the start of 2020, the last 3 years, we've been on feeling like there's high nerves over in the outside market. So we're making it through it pretty well. And I feel like we've established ourselves as, hey, beef demand is great. It's going to stay great right through it. And I still think that that's the case. The other note was, yes, the lower cash trade. Usually you can get second week of May, third week of May, you'll get one last little push from the packer to try to get some calves around them, to get some livestock before the calf crop's ready, before this northern calf crop starts to be ready, and they're not ready yet. And so there was a little bit of expectations that I can still ask higher prices. We're super current. We don't have a lot of cattle on the show list, but the South did buckle a little bit at 170 yesterday, calling it a couple lower. There's some circulating rumors that there might be some trade under that I can't confirm yet. But yeah, that's what's holding us back. If Southern Cash would get it together, I think this market's feeling like it wants to stay high and stay stronger. Having a little bit of a break here, I think that's okay. We're going to pencil in maybe that we're going to find a summer low, but feeders are the leaders. They're what's turning around, rallying higher. We know how tight this cow herd has gotten, and I think that's what's going to have to lead us out. And ultimately, I think we're going to hold better prices throughout the summer. I'm okay with we pencil in a break here, and maybe we can surprise that, say, hey, this cash market's holding on pretty good. We have the discount kind of priced in. So we get through this break here. I think we hold better than expected. We know the fourth quarter looks great. It looks tight as far as our fundamental numbers go, but it is a futures market. It could start to pencil that in a little bit ahead. And the way the feeders can bounce back after a swift loss gives me some confidence.
Yeah, and they're getting some help from this lower corn market, obviously. But I also want to point out, kills are still staying pretty strong here. And you also have choice boxes are still above that $300 level. So some fundamentals that are still pretty strong here.
Yeah, I'm surprised, by the fact that we are having the kills the size that we are. So, which to me sounds good. We still have some willing sellers. We've got some good prices on the market. We've got some profits that are happening in the feed yards, and they want to capitalize on some of those profits because we are at high levels. And that's also what's aiding into the keeping us current, as we're saying, I still got a pretty high corn basis here across cattle feeding country. So, hey, let's cash some of these in, and it's just going to help us down the road as we keep these cattle moving. The calf crop's not ready. Everybody's looking into those calf crop pens and wondering if they're ready yet. They want to start to sell at some of these higher prices, but they're just not there yet. And some guys are trying to and selling lighter. So it's just going to keep that bullish tone if we can keep these cattle moving that quick.
You bet. And we're into one of the better demand time periods of the year. So hopefully that's going to keep the boxes moving here and at some higher prices. Let's talk about lean hog futures. We're back to the plus side this morning. We had some pretty decent weekly exports. That market, is starting to, I don't know, are we gaining a little bit of momentum here, do you think?
It feels like we've got a few things we can talk about at least now. The funds wiggled out of some of their shorts. That's going to help. They were one of the major factors that kept pushing the market lower. Now you got some higher cash, some good exports. So something we can at least talk about and lean on a market that feels like it just was exhausted to the sell side. It's just been can we do it for a few days in a row to confirm that this market can indeed go higher. So we'll see if some of this fundamental news sticks. As of now, it is. I don't know that we're set up for a long-term rally, in my opinion, but we're turning it to the plus side a little bit. There was some margins that needed to get down to the packer and down to the producer. Producer's going to be last, kind of like we always say, but this will help as we kind of get some good fundamental news around it.
Yeah, and we have to work through some of these bigger numbers, it looks like, up front here. Slaughter starting to trail off just a little bit this week, and the futures still at a premium to the index. And so the futures kind of waiting for that cash to catch up here, as we've been talking, right?
Yeah, that has been what's holding it back is the cash market, and you see a little bit of life in that. And some of those packer cuts that you talked about was maybe just trying to establish some leverage back on the Packers side to try to get some greening for those guys to work on their profits. What was part of the reason? I don't know that it was totally not finding the numbers, so they needed to back it up so they could have some more leverage to try to get some profits for them, but. That's keeping the cash down, but now you're seeing this cash lift a little bit. Maybe that'll help things.
Okay. What about grains? Everything down here, and really, there's not any bullish stories to talk about right now. You've got WASDE coming up, bearish expectations for that. Exports this morning weren't that great, and so it just seems like we don't have a story here.
Yeah, spot on. If you're trying to be bullish grains, you're really searching. I mean, the news you're starting to look for is the only bullish story, we could really see this morning was, high gas usage. So the ethanol looks good. That's what's left to lean on. WASDE report tomorrow. We don't know what this crop's going to yield. Nobody does. We won't even know even all the way into next January. We'll still be arguing about that, but we ultimately have to start putting a price on it, or a yield on it, a number, and start to calculate. And when you see a 2 billion bushel carryout dangling out there for next year, wow. It's a big number to swallow for the corn. We know that we got stuff planted ahead of schedule here, at least ahead of a year ago levels. We're doing fine there, and there is some moisture around some areas that needed moisture all year last year, getting some rains now, and so that long-term weather pattern that was said to have shifted as of now, it maybe appears there's some water coming through the forecast here, so that's gonna just kind of say rain makes grain. And you look at the world stocks on some of these markets, and we're not that competitive as far as a price. Even some of the exports, there was some estimates that we were actually importing corn this week. So we did have a pretty small export number, but that is going to be the case going forward.
Yeah, and we're talking about maybe more cancellations from China. The market is certainly concerned about that. I want to point out, technically, new crop corn and beans took out the previous lows here that we had pulled last week. And so we're making new lows for the move. That's not good either, is it?
No, charts aren't helping us out. Get a key reversal yesterday, unable to follow through. The corn market's been leaning on that positive basis in some of the Midwest areas. And as we get every day we get closer to this next crop, you're going to go hand to mouth. You see these decreased futures, so you're not over buying yourself. And then China cancellations, like you had talked about, even they're backing out of some of that. So charts don't look good. It doesn't act good. It can't follow through on yesterday's move, so losing some confidence there.
Although the bull spreads are still working in the corn, and I think that speaks to your strong basis levels, and that's how the market is kind of dealing with that right now, this transition from old crop to new crop, isn't it?
Yep, bull spreads hanging on. Had a real nice day yesterday, and that's how a lot of feed protection needs have looked towards that spread to try to capitalize on that. And I think it should stay that way. You see May's going to go off still at some pretty good levels. So does July get to where May is? Maybe not so much, but I think it can probably stay wide all the way up until we get to the end of June before that spread would really start to decide what this next crop looks like. I mean, if we're looking like we got it planted, we got it rained, the new crop's going to kind of stay well under this July futures contract.
Yeah, this transition between old and new crop is going to be a tough ride down, I'm afraid. All right, thanks for joining us. Scott Varilek with Kooima Kooima Varilek, and that is Markets Now.